$7 trading a penny stock in high school. And that inspired me. I thought, I'm in my 20s. It's in the Great Recession in Vermont. The job market's terrible. I thought, if Ben could make $16,000 trading a penny stock, maybe I should give it a try. And I did. I decided to break the ice and I actually did it. Funny enough, as a New Year's resolution, I started getting up early, studying the market, and I set up a primitive trading station with a couple of old computers, borrowed computers, and I began trying to figure out this thing of how to become a successful trader. Unfortunately, 2 years into my journey, I really had nothing to show for it. I had made some money, beginner's luck, and then I gave it back, and then I began that downward sort of decline, and I made a bit of a mistake. So what happened for me was, where did my little eraser go? Oh, there it is. So what happened for me was when I set up my account, in the first year, I had my trading account, and even though I made a profit here of about $30,000 in my first year, I was taking that money out of my account each month to pay my bills. So I'd make money and then I'd take it back out, make some money, take it back out. So my account balance was staying pretty steady right there. Now the problem is in my second year when I started losing money, well, this was a problem because I had to add money into my account to prop it up. So I had to keep adding money into my account, and instead of taking out money to pay bills, I started paying bills on credit cards. I accumulated over $30,000 of credit card debt during my second year of trading, as I was really just paying for my cost of living through credit cards. This was not sustainable, and it ended up resulting for me in, it became my low point, but it also became my turning point. What happened to me was I was living in Vermont. I was at my old farmhouse, and I had a $5,000 red day. And it was at the beginning of the month. It was a new month, and my goal was to try to make $5,000 that month. So to lose $5,000 in one day was devastating. I mean, I was gutted. And now, once again, I had to put more money into my account. And it was like, I don't know how many more times I could do this. I'm running out of things that I could sell on Craigslist in my barn to fund my account. And so the interesting thing here is because my account was locked out and I couldn't trade in it, I had a built-in resting period. I had to list some things on Craigslist and kind of get the money organized. And so what I did was I spent that time going through my metrics, going through my data. This is why I'm such a big advocate of monitoring your trading metrics. And what I discovered in all of my metrics was a pattern. I discovered that there were common characteristics of the stocks where I made the most money on and on the stocks where I lost the most money. This was a treasure map. It was a map essentially telling me what to stop doing and what to double down on. And that's exactly what I did. So when I got my account back up and running, knowing that I had discovered my biggest winners were consistently on stocks that were up over 10%, I said, I need to focus just on those stocks. If it's not up 10%, I'm not even going to trade it. And that was one of the very first sort of minimum criterias that I set for whether or not I would even consider taking a trade. And from there, I ended up making some additional discoveries. I discovered that, and this is now based on all of the trades that I have to date. So all of my gains are, 99% of them are on stocks up over 10%. I still trade this exact same way. And interestingly, about 90% of my profits are on stocks that have 500 times higher relative volume. So what that means is that the stock today has 500 times, which is also 5 times. It has 5 times, 500% higher. So 5 times higher volume today than 50 days ago on the average. So why would a stock have 5 times higher volume today than its 50-day average? It's because of news, because there's some type of breaking news. And so now you're starting to realize in my metrics, what you can see is that I'm the type of trader who trades stocks that are moving quickly, that usually have some type of news, that have high relative volume. This is my sweet spot, and I've been trading this strategy now for years and years and years. And in fact, there have been people who have been trading this strategy for decades. It's not unique to me. My strategy, basically I reinvented the wheel. It took me years to discover a profitable strategy, but it is a strategy that many people have been trading. Ultimately, there's 2 ways to trade. You could trade with the trend, which is buying a stock as it's going up, and selling it higher. Or you could do reversal trading, which is where you buy a stock that's really weak and hope it curls back up, or you short a stock that's really strong and hope it reverses back down. I've done both, and I teach both in my classes. But my sweet spot, where I've made the most money, hands down, has been momentum trading. I find it easier to predict and find stocks that are moving up and jump on that momentum than to try to guess when something is going to reverse. So this was my turning point. A big loss became my turning point. And I want to encourage any of you guys out there who have had big losses yourself that the turning point could be close. You just have to look in your metrics and look in your data and have the discipline to follow what your data is telling you. So this is the same strategy that I've taught to members all around the world. Danny is one of our featured members. He also is teaching mentor sessions here at Warrior Trading, which is phenomenal. I love giving traders the opportunity to do this because he's somewhere in between where I am and probably where you are on the learning curve. He's not as far along as I am, but he's a little further along than you are. And it's nice to have someone, of course, you have me who's got a lot of experience, but it's also nice to have someone who is, just within the last couple of years in the thick of the learning curve, because they can share insights that are a little different from what I'm going through. He's a freelancer. He lives in California. And so his schedule is he's up early, 5:30 a.m., 5 a.m. in California. He trades early morning, and then his day is basically done by lunchtime. By lunchtime, his day is done, and now he can go enjoy the entire rest of the day. The only thing is he has to go to bed a little early, but I don't think he minds that too much. And then Timmy is the student that I did a 10-day head-to-head trading challenge with. He's a small business owner in Alabama, and his business is pressure washing. So he's pressure washing, buildings and stuff like that in the afternoons, and in the mornings he's focusing on trading. So this has given him kind of this really nice balance where he's got two businesses essentially. The morning is focused on trading. So he's trading at the open, the same as I am, the first hour, 2 hours of the day. And then the whole afternoon, he's got his other business. So he's also got diversification in his cash flow. And that is very important for managing risk. I have found that a lot of the traders who end up doing the best are traders who are able to diversify their income, which means maybe they're freelancing, they have side hustles, but where trading isn't their only source of profit. And I think the reason this is important is because when it's your only source of profit, it can create a lot of pressure, the way it did for me. And that pressure is not always beneficial. So when you have more sources of income, when trading is difficult, rather than getting fixated on trying to make it better when it's just hard, you're able to go with the flow and relax. And sometimes that really is the better way to do it, because markets are cyclical. We have hot periods and then we have cold periods. You want to lean in when it's hot and ease off the throttle when it's cold. But an emotionally activated trader, when it's cold, is going to get stubborn and they're going to dig their heels in, and they're usually going to make the situation worse. Okay, so now that we've talked about risk, let's talk about stock selection. Okay, so now you have an understanding that I do the best on stocks that are up 10%, all right? And I do the best on stocks that have 5 times relative volume or 500% above their average. So this platform that we've developed is searching for all of those criteria in real time. So here we go. Let's see. CING looks like it's making a nice move here, back up towards 5. So this stock is on our scanners right now. It's up 132%. It's up 132%. Its relative daily volume, my minimum is 5. Has to be 5. 5 times, which would be 500%. So it's 1,271%. This is incredible. So this stock absolutely meets our criteria, and we've got the news headlines right here. So we've got news headlines on this stock. This is everything that I'm looking for. So right here in this platform, I've got the charts, I've got the scans, I've got the news feed, and of course, when you're tuned in to my broadcast, you also have my market commentary. Okay, so once I discovered my strategy and I knew the type of stocks I made the most money on, I just needed to develop a system of finding those stocks each morning, which is easier said than done. So since my biggest winners almost always shared these characteristics, I just had to develop a system for scanning for them. So and this is kind of crazy. When I got started trading, I was the person who was Googling, hot penny stocks, and I was subscribing to all these newsletters and getting all these emails, which I guess was helpful because I was learning about what was moving, but these were junk, garbage, terrible stocks. And this is not the way to trade. I do not recommend it. So then it was like, okay, well, how do I find stocks that are actually moving? It's like social media, Yahoo Finance message boards. And this was a long time ago. So what I ended up doing was, I was able to really sort of figure out the characteristics and the criteria for the right stocks to trade. So we've already talked about this. Number one, 5 times relative volume. Number two, up 10%. Number three, there should be news. And number four, I found that I did the best on stocks between $1 and 20. And in fact, within that range, I actually make the most money on stocks between 5 and 10. So I will trade between $1 and 20. But if I see something that's 18, I know I'm not going to probably make as much on that as I would make on a stock that's 8. Or if I see a stock that's $1.50, I know I probably won't make as much on that as a stock that's $8. So 5 to 10 is my sweet spot, but 1 to 20, 2 to 20 is a safe range. And then we have supply. Supply is the number of shares available to trade, and I like to trade when there's a supply of less than 10 million shares. That creates an imbalance between supply and demand, and that's where we see the biggest moves. So, if you look at the stocks, and I'm not going to, I'll go through some examples in a moment, but if you look at all the stocks that have made 100, 200, 300% moves, they share this in common. They always have low floats. They almost always float, by the way, is the number of shares available to trade. And that's determined when a company does its initial public offering. And through their, period as a listed company, they can do secondary offerings or they could do share buybacks, but the float more or less stays the same. It's the number of shares available to trade. So if you only have 10 million shares to trade and the company has phenomenal news and all of a sudden people are buying it, yeah, you'll have some people that are selling, but there can be a massive imbalance between supply and demand. So in that example of the stock where I made $50,000 in one day, I think I had 40 million shares of volume, but the number of shares available to trade was only like 8 million. So that meant all of the shares available were being bought and sold, bought and sold, bought and sold. That creates float rotation. And that's when we see some explosive moves. That's when things get really exciting. Okay, so now I know what I'm looking for. But obviously after years of finding stocks the hard way, I was ready to do things a little differently. So I hired a development team, and together we built out this platform that you see right in front of you. So we subscribe to stock market data. So we're paying a ton of money for real-time market data. We've got the quotes that are coming in, and we have our servers that are aggregating all of that data. And what we're doing is we're sorting and searching in real time for stocks that meet my criteria for being worth trading. So this is a very complex system. I have the development team that basically pretty much 24-hour support, because we have services that run during the night to get ready for the next day. And this is all running behind the scenes. So when you guys log in each day, boom, you see the scanners. And it's beautiful, it's clean, it's all in one place. And you also have the charts built right in. So since we're subscribing to the market data for the scanners, we built out the charts as well. And we worked with TradingView to use their charting engine, and we connected it to our own market data vendor, which was really nice because it's a great starting point. So this is the platform that, of course, you're seeing right in front of you and that I use every single day in my trading. So step number one each morning. I'm logging in around 7 a.m., although typically I'm actually on my phone earlier, maybe 6:30. I'm on my phone and I'm checking to see what's the leading gapper. So let's see if I have the scanner slip on my phone from this morning. I actually closed that tab, but I'll open it back up and I'll give you a little preview of what it looks like. So each morning, literally, I'm rolling over in bed and I'm checking the scans. And what I'm wanting to see is, what are my top gainers looking like? Okay, so I'm gonna get logged in here and I'll show you what this looks like. So I pull up the top gainer scanner, top gappers, and I pull it up right here just like this. And now I'm like, okay, what's our top gapper? When I see that there's a gapper up 50%, 70%, 100%, I'm like, okay, I gotta rush over to my office. We've got some action here. When I see the leading gappers 5%, I'm like, I could take some time. Most days though, we've got some big gappers. So step number one is I look at the top gainers, and those